We are doing the May-June 2022 paper 12. This is the MCQ paper. There are 35 questions that come. So let's start with it. The first question, my advice and my suggestion to you all is that you all should first read the question and then answer. So which task is carried out by a bookkeeper? Any type of recording is done by a bookkeeper. So, recording the things in the book, recording the financial transactions in the book is done by a bookkeeper. Comparing the financial statements, preparing the financial statements, and decision making, this all is done by the accountant. So the bookkeeper only does the recording part. Let's go to the next question. I want to say which statement is correct. For this, I will need to analyze the account. So this is Amra's account, and I see there are things that are related to purchases. That means this is a supplier account, or I could say this is a PLCA. In the PLCA, this is the current liability. This is the credit purchases. Amraz is the supplier. That means has purchased from Amraz. Okay. Let's see which statement is correct. Amraz allowed 100 trade discount on 30th April. One thing to note over here is that trade discount is never recorded in the books. So this statement is false. The discount that is over here is the cash discount. Second, Amraz owed Lee. See, Lee has purchased from Amraz. So Lee owes Amraz. So Lee owes Amraz. That means Lee has to give Amraz. If Lee has to give Amraz, so Amraz will never owe to Lee. Lee owes to Amraz. So this statement is also incorrect. Lee owes Amraz 2950 on the 30th of April. Yes, this statement looks correct. That means on the last date, Lee has to give Amraz 2950. Lee's net purchases from Amraz in April was 2900. I can see the purchases over here is 3000. Even if I subtract 150, it will become 2850. So the net purchases is not 2900. So the correct option is option C. Let's go to the next one. Please read the next question. Sarah has sold goods on credit. I want to know how it can be recorded in Sarah's ledger. If I sell the goods on credit, that means sales account will be credited. So sales account is credited only in one option. So the option is A. Why have they mentioned the general ledger? To remember our ledger is divided into three parts. In the general ledger, I will keep all the income, loss, expense accounts, sales and income. So sales account, please be mindful of this word account. Sales account is maintained in the general ledger and customer account is maintained in the sales ledger. So when I sell the goods on credit, it would be sale credit suffer debit. It's option E. Let's go to the next one. Umar has sent a credit note to Mariam. Now please remember this. Credit note issued. Credit note issued is for sales return. Credit note received is for purchase return. If Umar has sent a credit note to Mariam, that means Umar is doing sales return. That means Umar is the supplier. Umar is getting sales return. Umar is the supplier and he will issue the credit note to Mariam. How would Mariam record this transaction in the book? So for Umar, it is a sales return because he has issued the credit note. So for Mariam, it will be the purchase return because she has received the credit note. So for Mariam, it is purchase return. Purchase, how would Mariam record this transaction? Purchase is always debited and purchase return is always credited. So purchase return is credited only over here. So the option is C. Let's go to the next one. Ben had sold goods to David for 900 cash. Which books of prime entry would David record this transaction? Whenever the goods are purchased for cash, or I would say the goods are sold for cash, in both the cases, goods are recorded in the cash book, which is the book of prime entry. So the option is A. Sixth question. A petty cashier received 100 from the chief cashier and 10 from an employee who had made private calls on business telephones. How would these amounts be recorded in the petty cash book and the cash book? Since the money is received by the petty cashier, so I would say it is petty cash debit. It is petty cash debit. How much money is received by the petty cashier? 110 is received by the petty cashier, so it would be petty cash debit 110. Okay, petty cash book is not going to be credited. Now, money is received by the petty cashier, but the head cashier has only given how much? Head cashier has given only 100. So from the cash book, how much is going out? From the cash book, 100 is going out. So it is option. What is an example of compensating error? We have always learned compensating errors are errors of undercast, overcast. So example of compensating error is wages account undercast, overcast. Let's go to the next one. Let's read the question. What do they want from us? What effect will correcting these errors have on the non-current assets and working capital? That means I need to correct the errors and I need to see what will be the effects on the non-current assets and what will be the effect on the working capital. I have purchased a machinery by bank transfer 5,000 and it was omitted from the books of accounts. Machinery is a non-current asset and my non-current asset is going up by 5,000 I have not recorded it, so I have to record it. So the non-current asset will increase by 5,000. However, the working capital, it is by a bank transfer. That means money has gone from the bank. That means bank has reduced, current asset has reduced by 5,000. If current asset reduces, I can say that the working capital is reduced by 5,000. I have purchased a motor vehicle and it was entered in the repair account. Since I purchased a motor vehicle and I wrongly treated it as an expense, I need to now record my motor vehicle. Since I will now record my motor vehicle, my non-current asset is again going to increase by 15,000. So in all, my non-current asset will increase by 20,000. So non-current asset is increasing by 20,000 in option C and D. But in option B, there is no effect on working capital. I, however, know that the working capital has to go down by 5,000. So the correct answer is option C. Let's go to the next one. Why is a sales ledger control account prepared by a different member? A sales ledger control account is prepared by different people so that we can deter frauds, so that we can catch the fraud if it is happening. You don't even need to look at an option. Okay, to provide an instant total of trade receivable, even the debtor's account is helpful. But we keep two different people. We keep two different people. One person makes the debtor or the trade receivable account, and the other person will make an SLPA. There are two different people who are going to make these accounts. The main reason why it is made by two different people is that I want to deter, I want to protect frauds. Next. What would be recorded on the credit side of an SLCA? SLCA account always has a debit balance. Balance begin down on the debit side, credit sales on the debit side, dishonor interest refund on the credit side, everything else on the credit side. So refund, credit sales, interest, this all is on the debit side. So sales return will be on the credit side. This will answer my question. Let's go to the next question. I want to know the correct profit for the year. So the draft income statement is showing a profit of how much? It is showing a profit of 38,750. I have received a 5% bank loan of 4,800, which was incorrectly treated as a revenue receipt. That means I got a loan. I treated it as income. So my income was more, profit was more, which was wrong. So I have to reduce the profits by 4,800. In an error, a whole year's interest on the bank loan was included in the draft income statement. Okay, so in the income statement, there was an interest on the bank loan. It was 5% interest on bank loan. So 4,800 into 5%, it is 240. So I treated as 240 interest on bank loan as an expense. full year's expense. But my actual expense was 4,800 into 5% into, I took the loan on 31st of December. So 3 months. 3 months, that means will be Jan, Feb, March. So into 3 by 12. So 4,800 into 5% into 3 divided by 12. 4,800 into 5% into 3 divided by 12. So it is 60. So what did I do? My actual expense was 240. My actual expense was 60. The expense that I recorded was 240. That means expense was overstated. Expense was overstated by 240 minus 60, 180. If expense was overstated, that means profits was understated. Profits was understated by 180. Since the profit was understated because of the error, now I have to correct the error. That means I have to increase the profits. I have to increase the profits by 180. So my corrected profit will be 38,750 minus 4,800 plus 180. So my corrected profits would be 34,130. Let's go to the next one. 12th one. Which statement about the reducing balance method of depreciation is not correct? In the reducing balance method of depreciation is charged on the net book value. In the initial year, the depreciation is more. And as the year passes, depreciation reduces. So, I want to know which statement is not correct. A lower amount of depreciation is charged in the earlier years of the asset's life than in the later years. This statement is not correct because in the reducing balance method, in the earlier years, you charge more depreciation, and in the later years, the amount keeps on reducing. So this is incorrect. So this would be the correct option. Let's check the other option. Each year, a percentage is deducted from the cost less depreciation to date. This is correct. It is used for assets which gives benefit in the earlier years of their life. This is also correct. The net book value will never reach nil. This is also correct. So this statement is incorrect about the reducing balance method. So the correct answer is option A. Let's go to the next one. The financial year of Yuan ends on 31st March. On the 1st April, he has purchased a machinery for 4,000. So in 2021, he has purchased the machinery for 4,000. He estimates that his useful life is 3 years, residual value is 100, and he is using straight line method of depreciation. The machine was sold on 1st April 2022 for 1,500. That means he sold the machinery for after exactly 1 year. So in this case, I am going to first remove the depreciation of the asset. So it would be cost minus residual value upon estimated useful life. So the amount of depreciation per year would be 3,900 divided by 3. So it would be 1,300. Now the cost of the asset that I have disposed is 4,000. The accumulated depreciation, which will be only for 1 year, because I disposed my asset after a year, the accumulated depreciation is 1,300. So the net book value of the asset is 4,1,400. It is 2,700. And I have sold the asset for 1,500. So I have a loss on disposal of 2,700 minus 1,500. The loss on disposal is for 1,200. It is option B. Next one, commission receivable was outstanding and commission received during the year was 4,650. The journal entry that I make at the end of the financial year. Okay, so at the end of the financial year, what do? You transfer income for the year to the income statement. This is the thing that I do at the end of the financial year. I will transfer the income for the year to the income statement. In the income statement, it follows a nominal account rule. So I will say debit is all expenses and losses and credit is all income and gain. So I will transfer income for the year to the income statement. So it will be income statement credit. So it has to be option A or option B. Now I have to see what is the income for this. This is the amount that I have received during the year. This was outstanding at the beginning. That means what I received is not total income for the year, or I would say what I received is not totally for the current year. It is not totally for current year. From this 4850, I have received 210 for the last year, and the balance I have received for the current year. And the balance would be 4850 minus 210. The balance is 4640. So I have received 4640 is the income for the year, which will be transferred to the income statement. So the correct option is option A. Let's go to the next one. They want to know the provision for doubtful debts on 1st January 2022. When I make a PDD account, I follow the concept of OCND. Old provisions on the credit side, new provisions on the debit side. I want to know the new provision. The policy is to make provisions at 5% of trade receivables. On the first day, the provisions amounted to 800. On the last day, my trade receivables was 13,400. My new bad debts was 600. Provision is always created as a percentage of your NTR. So what is your NTR? Your NTR is 13,400 minus 600. It is 12,800. Okay. So from 13,400 minus 600, NTR is 12,800. into 5% is 640. So the provisions of the last date is 640. The correct answer is option B. So the new provisions is 640. You should always remember that provisions created as a percentage of your net trade receivables. If it is created as a percentage of your net trade receivables, you will get your net trade receivables, trade receivable minus new bad debts, and you will get your net trade receivables. So the answer is option B. Now let's go to the next one, the 16th one. What is the effect of this error? I want to know the effect of this error. So after the financial statements were prepared, trader discovered that his closing inventory was overvalued. You will always treat your closing inventory. You will always treat your closing inventory as income. So if I am treating my closing inventory as the income, that means income was overvalued. If income is overvalued, that means profit of the current year is overvalued. Profit of the current year is overvalued, overstated. Capital of the current year is overstated. And what about the next year? The profit of the next year will be understated. Because the closing inventory is overvalued, profit of the current year is overvalued. Capital of current year is overvalued. Opening stock of the next year is overvalued. Opening stock is treated as an expense. Closing inventory is treated as an income and opening stock is treated as an expense. So opening stock of the next year is overvalued. So expense of the next year is overstated. So profit of the next year is understated. So you should understand this. The closing inventory is treated as income. Opening inventory is treated as an expense. This is a very important point to note. Closing inventory is treated as income and opening inventory is treated as an expense. So the correct option is option A. Let's go to the next one. I want to know the fees shown in the income statement. She provides services. Since I want to know the income that has to be shown in the income statement, I will make an income account. Income account follows the rule of OPOP ID, outstanding of the last year. So this is the last year and this is the current year. So this is the current year and this is also the current year. Owed means outstanding. So outstanding of the current year is over here. The money that I received is over here 22,500 and outstanding of the current year is over here again 1,500. I want to find the income statement. I want to find this. So I will close this account. 22,500 plus 1,500. This is 24,000. 24,000. 24,000 minus 4,500. The amount that will go to the income statement is 19,500. It is option A. Let's go to the next one, 18th one. Which item will not appear in the appropriation account? Interest on drawings comes, interest on capital comes, salaries come, There is one item that will never come in the appropriation account is interest on loan. So the correct answer is option B. 19th one. I want to know the total profit made by the partnership. Okay. Carol and Dennis are in the partnership who are sharing profits and losses in the ratio of 2:1. Daniel's current account balances were 2,000 debit and 7,000 credit. So when I talk about Daniel, his current account balance is 2,000 debit and 7,000 credit. There was no drawings during the year. What is the total profit made by the partnership? So Daniel's opening current account balance was 7,000 debit side. When I closed it, there would be profit for the year. And his closing balance is 7,000 credit. I should note over here that the closing balance, you will write it on the opposite side. So since it is a closing credit balance, I will write it on the debit side. So this is the closing balance 7,000. So what is the profit that they make? 7 plus 2 is 9,000. 9,000. So the profit made during the year was 9,000 for Daniel. Daniel's share is 9,000. Daniel is getting only one share. The profit sharing ratio is 2:1. So Daniel gets 1/3 share. So if 1/3 share is 9,000, so what will be all the shares? So from 3 shares, 1 share is 9,000. So 3 share will be how much? It would be 3 into 9,000. So it will become 27,000. So the total profit of the partnership firm is 27,000. Let's go to the next one. I want to know which statement is correct. A debenture holder is of a limited company is liable for the debts of the company. This is wrong because a debenture holder gives loan to the company. He gives loan to the company. So he is not the one who is going to repay the loan. He is the one who is giving the loan. So this is incorrect. A partner is liable to pay business debts from personal assets. Partnership firm is an unlimited liability type of thing, wherein if there are any business debts and the business is not sufficient to pay back the money, so the partner's personal assets are sold to repay the debts of the company. So this statement is correct. So if I say it's only C which has option 2, so the correct one would be C. Let's check the fourth one and see if that is correct. Sole trader is responsible for the debts of this business, so this is correct. So the correct option is option C. Let's go to the 21st one. I want to know the correct amount of retained earnings. Retained earnings is the one column which adds the profit for the year. So financial statement of the limited company showed retained earnings of 31,820. It was found that no adjustment had been made for the following. So retained earnings was 31,820 but I did not adjust these things. Commission receivable accrued. So I did not adjust outstanding income. Outstanding income will increase the retained earnings because it will increase the profits. Anything that will increase profit will increase the retained earnings, and anything that will decrease the profit will decrease the retained earnings. So outstanding income will be added. Prepaid insurance. I did not adjust for the prepaid insurance. So what am I supposed to do? So anything that was an asset that we recorded on the asset side, we will add it. So 31,820 plus 450 plus 175, 32,445. This is a shortcut. So I did not reduce expense. If I did not reduce the expense, that means my profits was less